Hey everyone, welcome back to Streetwise Economics, where we break down market moves and share real-world investing and trading strategies that actually make sense. Today is April 22nd, and I've got a full trading update for you. My portfolio is up 32% since I opened the account. I've added a few bold trades this week, including leaps on SPY, JP Morgan, vertical calls on Nvidia, and a few case secured puts I'm managing on Palantir and SoFi. So before we get started, as always, this video is for educational purposes. I'm not a financial advisor. I'm just sharing what I'm doing in my own portfolio. None of this should be considered investment advice. So let's do a portfolio performance snapshot. Let's kick things off with the numbers. As of this recording, the portfolio sits at Canadian $28,218.95, up from just over 21,000 in deposits. And these are the performance highlights as of April 2022 when I took this screenshot from my brokerage account. Total profit and loss is actually $6,734.85. That's up 31.35%. Today's gain alone, it was insane for me at least, $3,377.28. That's a 13.74% jump. And the open profit has been 1,478.96 when I took this. So you can see that on the graph that I'll put on the screen, that my portfolio has spiked recently. That's a mix of timing, volatility working in my favor, and a few trades I will break down in a second. So let's see, what are the new strategies that I'm testing? So when we talk about strategy, this is something I find very interesting and exciting. One, I've been buying undervalued stocks with strong fundamentals. I started adding some long-term positions, including Berkshire Hathaway Class B shares. Berkshire Hathaway is boring, and I like the boring, cash-rich, well-managed, and historically solid stocks in the down markets. And also, even though I don't expect a lot of upside, it's a very stable stock, and I want to hold for the long term. Two, I have also been buying leaps with high delta. What are leaps? Leaps, basically, I'm using naked options that actually expire at least 1 year out. So I'm looking at the delta of like 0.8 to 0.9% because that's deep in the money. The reason why I'm doing that is because when you are trading options, the delta, the decay factor, because as the option contract, if you are looking at, if you are taking naked options, that is the calls and the puts. The calls, you're basically betting that the security is going to go up, and the puts, you are bearish. In other words, you are betting that security that you are leveraging, you are trading using options is going to go down. What happens is the option contract, and one contract is equivalent to 100 units. It actually starts to decay very quickly. So what I have found from my research is that if you are taking a leap that goes out like 1 year out, what it means is that I want to roll them out, let's say 9 or 10 months before the expiry date. So assuming, let's say it has gone up, so that's how I want to actually trade. But things can change. This is how I see trading. I'm not going to lie to you guys to say, okay, this is cast in the stone. Things can change pretty fast in the market, as you have seen. So I'm going to be flexible, but at least now this is my plan. And yes, these are bold moves, but I'm bullish on both names. And this lets me get strong exposure with full share cost. In other words, if I had gone with 100 shares for SPY, if I got in that case, let's say it was trading today, let's say at 528, it means that's 50,000. Let's just say it's over 50,000. Let's say 50,000. I don't have 50,000 to put on one position, particularly in this case. My portfolio that I'm trading and sharing with you guys, as you see, it is still growing. It's a small account. So what I'm doing is, if I then use options, I can use the small amount for the premium, but I will still, in that case, controlling equivalent of 100 units in that regard. So I also did vertical calls on Nvidia. Instead of going naked, I created a vertical call spread on Nvidia, reducing the cost and risk. Volatility is high, so this structure works better for me because vertical call, I've explained this, and you can check out the videos that I've shared about vertical call spreads, vertical put spreads. Basically, I'm bullish on Nvidia, but I'm getting very close into the money. So I'm choosing a high delta, but I'm basically keeping my risk in that particular case. And then I did a trade on Apple. I bought it yesterday, and I had also sold a weekly call on Apple. And today I locked in the profits. I took the profits because Apple, with what is happening in China, I didn't want a lot of overnight risk. So I cashed out the money and I took some profits. So these are shorter term trades that I am using to actually generate quick wins while managing some exposure. So let's talk about cash secured puts and how I'm reducing risk. On the income side, I've added cash secured puts on Palantir, and I just got in for the strike price of 95, and I got, I think, $320. So if I'm going to manage the position, probably close if I see profit, if the market is going to be up tomorrow, and I'm recording this on the 22nd. So that's the thing with managing positions. If I see profit today, I could have taken the profits, but still, I'm kind of like just saying, okay, today the market was up. Tesla is recording earnings. I'm going to see tomorrow. And if by the end of the week, if I get assigned, I'm fine with it, but I've already gotten, I will go get $320. So that means even if the average price will be $95, I will have like $3.20 lower in terms of my effective cost basis. So those are cash secured puts that I am actually using. So I also did 10 contracts for SoFi, 5 that I did for the strike price of 10, and the other one, when it dropped further, I did another 5 for the strike price. I think it was $7. So it actually something that I've been just rotating at SoFi. The price is reasonable, the premiums, they are good, and also it is very good volume. Now, why cash secured puts? Basically, I should have that money in the account, right? So that, let's say if I take one contract for Palantir with a strike price of 9,500 of 95, it means that if I get assigned, I should have 9,500 for the 100 shares equivalent in that case. So the reason why I like cash secured puts, they give me a chance to own shares like at a discount while generating income upfront. It's one of my favorite risk controlled setups right now. So what are the lessons that I'm learning in real time? One thing I want to be real about is that this market is not easy. It's emotional, it's noise, but I've been learning a few key lessons. One, take profits when they are there. I used to hold on too long. Now I lock in the wins. Take the seed profit, take profits, and then I unlock my capital. I get into the other move that I see and consider to be highly probable. Because when I'm trading, I'm using probability to say there's a probability that this trade will be successful, and then the probability that this trade is going to be a failure. In other words, I'm going to lose money. So if I lose money more times than I make money, that's how you become a loss-making trader. Right now, as you have seen, I am profitable, but things can change. Now, I want to stick to conviction trades. Everything I add now has to pass a quality screen. I've explained this in my past videos. To respect the margin, I'm staying under 30% of the margin maximum. I know in this channel, I've said that I'm not going to use the margin, but some things have changed fundamentally in this market because what I've seen is that the equities market in the USA is really put down. And I'm actually going to just use, let's say, 30% of my margin. And let's say in that case, it gives me 20,000 for me to use. But what happens is with the margin, you get charged. So what I'm doing is I'm generating weekly premiums. And sometimes I just buy like what I did for Apple, right? Essentially, if I get in, I get out the next day. Let's say I got out with, let's say, $400, right? And I had risked 18,000. That is assuming Apple would go to zero, which is highly improbable because they have a lot of cash on their balance sheet and it's still a strong business. Now, And then I just get out. That's why I'm doing these short trades. But for the long ones, that's where I'm using my cash, right? So I'm just saying, okay, I'm just gonna, let's say, play with, let's say, 10, 20,000, right? In that case, US dollars. That is partly on high conviction stocks. So I'm also learning that it's important to trade less, but also smart. I'm not chasing, I'm building. So what I'm realizing is I'm actually just placing my trades Monday or Tuesday, and in between I see if there are profits. I just check maybe once or twice or 3 times a week. Then I do other things like what I'm doing right now. I'm doing content creation. So I want to highlight the caution of using a margin account and risk management. The reason why I'm using margin account, like I said, the market has really dropped substantially, and I am only doing stocks that I understand and just using part of it. Most of my positions, they're actually on cash in this margin account. Otherwise, on all my accounts, I like to use cash. So let me explain this because it's something that I see a lot of traders mess up. In my case, I only use a small portion and don't want to ever go above 30%, especially in a choppy and down market. Margin can amplify gains, yes, but it can also burn you and bury you alive very fast. Hey, so my approach is keep most of my trades, like I said, case secured, be smart, don't stretch, think survival before scale. So the last part I'm gonna talk with you guys about is the bigger Streetwise pivot. Streetwise economics is evolving. This isn't just about charts and headlines. We are talking about making markets simple, bringing clarity in volatility and sharing real trades and real results as they happen. This is a real portfolio that I'm sharing. It's a small portfolio, but for me, I am actually enjoying this process. I will keep showing you what I'm doing, win or lose, or whatever happens in this case, so you can follow along and learn through my real market moves. If you have been following my trading journey so far, thank you. If you are new here, hit the subscribe button, check out other videos on this journey, and follow as I continue growing this account. Next video on my trading updates will be on this channel as I do regularly. So keep an eye on that. I walk you through my most recent trades then, breakdowns, and also how I will be adjusting my portfolio in real time. Until then, stay sharp and stay streetwise and keep building smart.